Well, and now on to our guest editor segment. You've been seeing that on the channel, and we've got the man right here in the studios with us. Please welcome Swarup Mohanty, Vice Chairman and CEO at Mirae Asset Investment Managers, joining in on the show right now. He's going to be the guest editor today on ET Now and ET Now Swadesh. We're going to be chatting with a whole host of corporates as well that Mirae is extremely bullish on. BFSI, the entire EV theme, they're extremely bullish on the consumption story right here in India. So we're going to be talking and getting a color on all these sectors and of course the overall market. But Swarup, welcome to ET Now. Thank you so much for taking the time out and joining in today.
No, I should be thanking all of you for this incredible honor. I mean, initially I'd said yes, not knowing the entire gamut of work, but as I explore it, the amount of work that goes in behind to see the screen is just unbelievable. What a space of learning for me in the last few days.
Right. So much work goes on behind what you do.
No,
I mean, 17 years old, fun. I was just looking at that. 45 number of schemes and an AUM size of over 2 lakh crores. What does it feel like to have this kind of journey clocked in 17 years?
No, I think it's a very humbling experience. First of all, always a humbling experience to be in a fiduciary role. I mean, to enjoy the trust of somebody else's money is very overwhelming to start with. And then when we started as a global asset manager, today we stand in India as the only organic global asset manager in the country. It's not been very easy for global asset managers. Right. And to be sitting with over 70 lakh folios is something which we had not thought of. Maybe AUM we would have thought of, but to be enjoying so many investors' trust is pretty overwhelming.
That's
One
the
is
India story, right?
Yes,
Rising with India.
yes, absolutely rising with India.
That's what I also want to know, because you're wearing the hat of the guest editor. So what's on radar? What are the news headlines for us and for the viewers?
I think what's happening, and this is because we travel so much, meet so many people. People kind of believe the India story, but somehow they don't internalize the India story. Right. If we can in the process get people to internalize the India story, that it is a structural story, and how you should and one of the best ways to get that story into your life is through the capital markets. I mean, the country is set to grow. How will your wealth grow is the bigger question, right?
Absolutely.
How can we marry the two would be something which I would say would be a job done.
But in 17 years of experience, you're a Korean company, okay? India as a market was something that I don't think so Korean at that time must have thought that will flourish like this. I really want to understand the transition in last 17 years as an Indian investor, as a Korean company that you have witnessed.
Kavita, I must tell you that our chairman, Mr. Hyunju Park, is a fund manager himself. He started the mutual fund industry in South Korea. We were probably the first financial company to set out of South Korea to build base. We came in 2006, 2007, and when the team came to India, and then there was this call from here to our chairman, why are we here? There's nothing here. The reply was, that's exactly why we are here. Trust me. And I got the chance to narrate the same story to the Prime Minister of this country.
Exactly.
Is that, sometimes I wonder what they see in India that we don't see. They're so one-sided in their view on the structural growth of this country is incredible to sort of note, because I've sat in rooms of 200 people, 199 Koreans and me, the only Indian.
Wow.
And on stage, our chairman says that only one country will flourish in the next 10 years. One country, when you single out, you sort of think, what is happening? Maybe they can see things more in a neutral manner from the outside. Some things we get a little biased. Or we were just discussing, the more boring, the more biased you make it, the better the outcome. Maybe they are able to see
the power of compounding is what everyone
absolutely. But you need to sit. If you sit in the story, a lot can happen.
All right.
Absolutely. So, but having said that, in the last 17 years, and we must give credit where it's due, the Indian investor also has come a long way. I mean, 17 years back, who would have thought that your fund alone is going to manage the AUM size that you have? Having said that, the Indian investor always gets edgy with the news headlines and all the noise around. What is it that you're making of all that's happening right now? This concern around what's going to happen with the tariffs, what's going to happen on the global slowdown front, and of course the India story wherein valuations are always a question mark.
Yeah, I think one, of course, when a country like the US starts changing in behavior, everybody else's behavior also starts changing. I think we are in that phase. But as this when tenure starts expanding, people will accept that and form their own opinion. I personally feel that from defense to capital markets, every country is now reworking its own strategy. That's the time, and such a phenomenal time to be sitting in the world at this moment. And then probably each country will start defining their own style in the world, and then probably India will shine, and that's my bet on it. The second part is from the investors. I mean, today, if you look at the market, and all of you kind of talk about it many times, is that the market shifted to that single retail investors who have come together and piled this 27,000 crores of support to the market on a monthly basis. And that's where is the behavioral shift. I mean, it's just incredible. I had not thought that I would see this before my retirement. I would joke about it, but it's so fascinating to see that. And as the demography is shifting, you know, right now 3 generations are investing together, which had never happened in my career. My father's generation, my generation, my son's generation is something which will turn it around. I'm extremely bullish of their behavior. I'm very confident of their ability to see the long-termness, if there's a word like that, of the India story. And I think good days ahead is what I can say.
Well, what do you make of the current market construct? You know, like we're saying, with all the talk around tariffs, and still, you know, question mark on which way the tariffs are going to go for India, and we're still awaiting that letter, quote unquote. And valuations which are not really as comfortable as we have seen in the past. What is the next 1 year looking like with all the uncertainties around?
My personal take is India is a structural growth story that is a given globally, right? If there's a growth story, it's India. So based on that, India will definitely have its own negotiation powers, negotiation levers when it comes to that negotiation table for the tariffs. I mean, the fact is every country would like to participate in this country because wealth is being created at an individual level as we speak. And then it will be the largest consumption market, second to probably, or third probably to US, China. We are there. So when we look at it from their perspective, they will, anybody, not just one country, would want to participate here. The best part of all this is we consume our own. 96% of our produce we consume. So while there is an impact of tariffs, we can be on our own, in our own capacity, right? And that's something which we need to realize, that our cars can be consumed by our own people, our produce can be consumed by our own people. So net, you know, we are at this moment a very isolated story from the rest of the world. When you look at, you do the headlines. When you do the headlines, compare whether those headlines appear to or appeal to our country. It's very strange to say that India will remain isolated on data points and strong, consistent data points. While, you know, some of us get disappointed when growth comes down to 6%. World is growing at 2-3%.
So 6 is great.
It's not good, but we get disappointed at 6%, right? We have to grow at 6%. It's our house commentary. But that's 6% versus 2%. Right, and that's something which people need to internalize.
But we need to have high benchmarks for our market. But then, having said that, I'll just take the conversation once again to the investors' point of view, and you know their trend that we are looking at. 27,000 crore plus SIP numbers every month coming in. Okay, your target crossing 30k crores by when? Okay, and how much of the story will be driven by B30, because that's the market everyone is looking at. That is the place where we are getting new investors, and the generational wealth that you spoke about is a lot coming down from B30 downs as well. So how strong is that story for you?
It is a constructive story, and it's just a story which is beginning. I mean, as we start this financial penetration in the country, and that's happened to all products. I mean, I don't think our product is any different. The story starts from there. The young are there, and they're taking to investing like not our generation, right?
Exactly.
The SIP to start with a salary is given in a lot of children that I see. I meet a lot of children because my son's around 26, and I meet a lot.
Are they doing SIPs?
Yes. You see, initially, just when I pushed my son, probably he joked to one of your counterparts that my dad spends all my money in investing. That was his joke. But you know, as they saw the compounding over a period of time, now I think it's a given. I mean, I see so many children now at the beginning of the salary, and that's where all of you have done the job. You know, it's just that you saying that this is a good thing has gone down well, I think, and it's just the beginning. How much? We don't hardly have 5.5 crore folios in the industry. industry.
Right.
Once this become 20 crores, 25 crores, then we'll talk about a sizable sort of sum coming in. And what we've seen is we don't need a lot of big money to form 27,000 crores.
Right.
Small monies together coming in makes it more consistent, structurally good for the market. There is a buyer in the country. I mean, you take the market down, the industry is there to buy and across. And it's not just one asset class or one market cap. Across market caps, there are strong SIP book which is built in, and you cannot take it away from the structural support to the market.
Talking about FIIs now, how do you think they are viewing the Indian market, looking at the China story also that's catching up now?
See, make no mistake that we need FIs. I don't agree with that thing that, okay, this 26, 27,000 is there. It's a fact that we're just 3% of global market cap. Our companies are good enough to become far larger than what they are on the market cap's perspective, and that's where this big money is needed. There was a reason this money went out. When you look at the US story on the bond side also, the yields were far better than what was there in India. So when there is a flight to safety, earlier money would go to hold the dollar. But that is changing. Money is holding the dollar as well as gold now. Sovereign money, right? And that's probably what we'll have to watch out in the next 8-10 years. But like I said, it is not a story which cannot be not held by the FIs.
Okay.
The valuation, that's where comes in. But slowly but surely there will be the realization that India will not be available below a certain valuation.
Right.
It's a money game, right? The price is where the money meets, right? And there is money. So once they get that, and more important, and 2-3 factors worked out very well. Inflation in control is a huge thing for India. I think the currency holding is a bigger thing for FIs. I mean, it is a dollar return for them. I think all these have started adding up. The oil benefit is also showing up to the country. So things are looking far better than what they were, say, end of December last year, when second half when the money went out. It's a matter of time.
But, I get that valuation point, and I completely concur with that as well. But in the, say, next 1 to 2 years, do you think money making is going to be a little harder than what it has been from the COVID loans?
No, it should be, no. See, COVID was a base
but
impact.
When we have people like you, why it should be difficult?
See, money making cannot be happening in a year or two.
Sure.
But it depends on what you do in those 2 years will define how much you make in the next 8-10 years.
So what do we need to do in the next 1 to 2 years? Let's come to that.
It's a great story available at a good price. Please accumulate. This Kavita and I did this in January, and in January I had said this is a year of accumulation because the market needs triggers. I think some of the discussions that will happen during the day could be on the corporate earnings, which is the trigger which we will hope to see in the second half of the year. That's probably the final trigger the market is waiting for. Because they had disappointed last year, right? Growth. And people say growth had disappointed, but growth had seen sustained, continuity for 3-4 years. At some point of time, somebody will say, I cannot buy a car, right? Or whatever. But I think the second half of the year is very crucial. From a impact perspective, the corporate results is something which all of us are looking forward to. A lot of other things have started falling into place, but the markets behave in a certain way. Wealth is created by how you behave.
Right.
And in such markets, when the country or the market is available at a certain price for a longer time, and that's why probably the SIP investors will continue to accumulate units at this price, and when the markets turn, the number of units that they have accumulated will start holding in their favor in the upturn of the market. And that's something which one has to realize, that what you do in these times is most important. If you stay out of the market, I always say this, there's a risk to investing, there is a risk to not investing.
Absolutely.
There is a risk to investing in India, there's a risk to not investing in India. At this moment, the risk to not investing in India is substantially large.
So let's talk about, what's going to make money. You've talked about the BFSI theme. When you talk about the India story, this is one sector that you've got to be invested in. You've talked about the EV theme, wherein there are a lot of question marks right now, a lot of competition, a little bit of slowdown as well, at least going by the monthly data. And you continue to be bullish on the entire consumption theme. Give us a few highlights, and why is it that you feel that these are the sectors that are going to make money?
I mean, in flight to safety, always it's better to be with the core. And like you rightly said, BFSI is the core.
Weightage.
Yes, weightage. You can't take away the weight of BFSI in Nifty 50 to start with. And in the last 2-3 years, and you just saw a report on the private banks before this, the private banks had looked very attractive to us. So in the risk of underperformance, and we've discussed this on your channel in a lot, we sat steadily on private banks, which has helped us in the recovery of some of our schemes coming back pretty smartly. But you have to hold them when the going is tough for them, right? And take that journey. When they change, when they unfold their value, you don't know. If I knew that, I wouldn't be a salaried individual, right? But we remain extremely constructive, more on the private bank side than on the other side. I mean, India is a consumption story. And the fact is this consumption is getting re-rated because India is moving from a low and mid-level consumer to a mid and high-level consumer, right? And then you Google, most of the high-end products are bought by the middle class of the world, not India. Aspiring people. And that's India's story. Wealth is being created. In 2005, India used to be almost 65, 69% low income. In 2030, this will reduce to 15%. And when wealth comes at a personal level, aspirations are met first, then needs come in. It's this aspirational growth which will drive India. So for me, consumption is a perpetual theme. We've run a consumption fund for 15, 16 years now. And you can check the returns for yourself. And that itself is getting re-rated. So at the heart of India lies consumption. And please sit in that story, right? And EV is the future. I mean, India practically consumes the number of EV that is produced, right? And EV to me is a fascinating story of change and disruption because battery makers today are challenging global, what can I say, top-end car makers, right? And there was a time when the German cars dominated the world. Right now is the advent of the Chinese cars. And how does India figure in that fight? Because when India opened up, and when the foreign cars did come in, we had thought the Indian car makers would be wiped out.
Right.
You go from Mumbai to Pune, and you see it's not a war of the German cars anymore, it's a war of
all the Indian ones.
And see the value and the quality of cars that are available at a certain price. It's incredible. The facilities or the, what can I say, the specifications that were available to people for high-end cars are now available at all cars level. So that's a great disruption story which we follow, and going forward more and more people will shift there. First it was to own that green number plate, but that's not so because the cars are becoming superior. And that's something which we'll have to watch. This whole thing of now it's opening up one of the largest EV players now in India. How will the Indian market react is how the Indian manufacturers react, and they're taking it very well, right? If you see the Twitter war there.
And how Indian consumers react.
Yes, it'll be fantastic. And it's very, very, forget the story. It's just so good to just follow that story.
Absolutely.
Sure. So the mega trends identified, BFSI, EV and consumption. Now having said that, we also want to know what kind of an investor is Swarup Mohanty. Okay.
Disciplined.
You are out and out equity investor. That's all we know. But then how does your current portfolio look like in terms of asset classes and exposure?
Like I just said, extremely boring investor. No, but I mean, as a family, you know, we'd approached the investment to go to a certain level. We had put a safety net. And after we crossed the safety net, we said, Chalo, we'll start, you know, looking at it more actively. And then the Indian markets now are posing such great themes that some part of the portfolio has moved to an active bet on certain sectors or themes, as you not sectors, but themes. But broadly, it's a 70-30 story.
Okay,
70 in equity.
20,
around 20 in debt. And I keep that debt and include my PF in that debt also.
Okay.
And then 10% in alternates. And in alternates, you know, my wife introduced me to art a bit. So that's fascinating to see the talent of artists in India.
Premium investor.
No, I'm not a premium investor. See, you can buy anything at any price. So you limit your price and aspire to.
But you are not big on real estate and gold, are you?
No, gold now, that's the story. You know, this whole thing of, and that's what is the beauty of our process of investing, the process of unlearning. My gold, see, by virtue of coming from the eastern side of the country, we have gold in the house, right? You know, in my younger days, I could give Bapida a run for his money on the gold I used to wear, right? Really? I have a little now, but it's come off in the corporate. But, you know, the point I'm making is there's a lot of gold inherently in our houses. My wife does not take to gold buying much. Most of her buying is through me. You know, I push her. But by virtue of that, if biggest unlearning has been gold has outperformed equity for the last 70 years. And I was meeting some people in the other side of the world, and I was told that bulk of the retirement money goes into multi-asset sort of structures, bringing out the nature of asset allocation. Maybe missed a little bit of gold there because I did give out a gold commentary, but I didn't apply it to the portfolio.
Okay.
Because I'm again going back to the boringness. Maybe next time around I'll be more active, but extremely boring. But structurally what's happening, and something maybe we'll discuss during the day, is that the tilt towards large cap is shifting because of the number of public issues in the mid and small. To own the length and breadth of the market, you have to sort of allocate more towards mid and small as we speak, and that's something which is happening in the market. And some of the structural themes, like you say, ET, capital markets, a big theme I believe in. IT, you cannot miss at this point of time, great prices. So some part is becoming a little active.
Okay, and we'll see you again later in the day, and we'll talk about these themes in greater detail. We'll have Dinesh Kumar Khara, the former SBI chairman, joining in. He's going to be in conversation with Swarup also, and Sudipta Mukherjee, MD at Texmac or Rail. And not just that, the small cap, mid cap maverick, we'll have Nilesh Shah, MD and CEO, Envision Capital as well, joining in on the guest editor segment.